Hi, this is Steve Westmark, Counselor Realty. Thanks so much for watching my video blog this week. Well, the statistics for the Twin Cities real estate market have come in for December and ending up 2012, and we can kind of give you an overview of a comparison of December of this year versus December of last year. Over last year's numbers, our pending sales were up by 6.7% to 2,900. The next slide I'm going to show you is where the closed sales are only up by less than 1%. So we're seeing, in comparison to last year at this time where we had a continued increase, we may be going into 2013 with about the same statistical growth, or maybe we'll have more of a flattening, though we have a good number of buyers still buying in the marketplace. The next slide I'm going to show you is the price per square foot. What that shows is when you take all the sales and their square footage divided by the total square footage, what are the houses getting per square foot? And you can see back in 2010 we were at $94 a foot. We ended 2011 in December at $90 a square foot, and this year we're at $103 a square foot, which is about a 14% increase. So we are seeing some increases that are going on throughout the marketplace in our dollar per square foot. The next two slides are some pretty major things that we're going to see as a change going into 2013, and that has to do with the inventory of homes. In 2010, in December, we had 22,600 homes for sale, and today, at the end of December, we're at 11,875. That's over a 50% decrease in the amount of properties for buyers to look at in the marketplace. In the next slide, we'll show you the month's supply of inventory on the market. When the marketplace was the softest, we had nearly a 12-month supply. In 2010, we were at a 7-month supply. In 2011, we were at a 5-month supply. And right now, we're at 2.9 month supply, or a 3-month supply of homes on the market. Statistically, on a national basis, they tell us that if you have a 4-month supply or less, you're more in a seller's market. If you're in a 4 to 6 month supply, you're in a balanced market. And if you're above a 6-month supply, you're in a buyer's market. The last sheet I'm going to show you is the affordability of housing. And you can see we've kind of been bumping up and down in the affordability. And let me just explain what's happened. That last year it was more affordable to buy a house because the prices were lower. If you remember the dollar per square foot that I shared earlier being 14% higher, that means that our prices of our homes are higher. We did have low interest rates at this time last year, but not as low as they are today. So now what we've seen is our affordability of housing has dropped slightly, though it's still very, very affordable, and in fact you can own for less than it costs to rent. But we have a little bit higher prices in the marketplace, with pressures on the market for prices to increase, and an excellent low interest rate of around 3.25% to get a 30-year fixed rate mortgage. I hope you enjoy these statistics. Be sure to call me if you have any questions on how this can help you as a buyer or a seller in the marketplace, and use it to your advantage in 2013. Thanks so much for watching. Make it a great day. Bye.